Now, whether the Sensex will touch 1 lakh or 90,000, nobody knows, but directionally, I think it's headed higher. But but the event which will keep us all glued on Sunday afternoon is going to be India's first World Cup match against Australia. What are the odds? What we should expect? That's footage and pictures coming from of Indian cricket team. They've arrived in Chennai. You can see Virat Kohli, you can see Hardik Pandya. So that's the footage and that's pictures that Indian cricket team has arrived in Chennai for the opening match. But Shad's got more nuances, more details in terms of the expectations and in terms of little bit of averages of historical matches.
The expectations for the India-Australia match is very high, and India will be having its opening match coming in, and the date is 8th October. The venue will be Chennai. From 2 p.m. onwards, the 50-over match will start for the World Cup, and the excitement is at its peak levels. But there are certain factors which you'd be actually watching out for just going ahead, and the first one being, of course, Shubman Gill getting a dengue. So that will be something, his selection would be something which will be a question mark. And most spinners likely expected to be there on a black soil pitch. Now, why a black soil pitch? That pitch turns. That is why, be it investment, be it matches, we should be always prepared for the turns. And also Australians, they have acclimatized just before the World Cup. There's a pre-World Cup series which was played, and because of that, they have acclimatized as well. Now, apart from the factors, let's look at the facts. Now, two interesting matches were there. In the year 2003, the final, India did lose out, and that was a massive loss, but that loss was avenged. 2011 semi-final, India outscored Australia and then went on to win the Cricket World Cup as well. So you can see India versus Australia on a head-to-head basis if you look at the data. For the 50-over World Cup match, wins just 4 for India, but Australia is on the other hand having 8 wins. But do remember, in the last World Cup encounter, India did win in the highest scores, both the teams going above the 350 mark, while the low scores coming below the 130.
That's something that's going to keep our weekends busy for sure, and Sunday for sure as well. But Sharad, thanks for that excellent analysis. Let's hope Team India has a glorious start in this World Cup. Rajat Sharma joins in on the show right now. Rajat, more than the market, I think it's the Sunday match that everyone's going to be looking out for. Have you booked any of the tickets for the World Cup this time?
No, Aisha, no, I've not. And I think the Sunday match, to be honest, these two teams particularly are the only two teams in, participating in the World Cup which have been playing with each other. I think this is going to be their 4th match in the last 1 month, because the Australian team has been in India. They've been playing a lot. They're very used to each other. And, it's just a continuation of the series that ended. So for the players, it will be no different than that. It'll be an interesting match because, World Cup match, the pressure is at a different level. So will be interesting to watch. But no, not Chennai. But, I'll tell you what, when India is playing Pakistan, I think on the 14th, that time I am in Bombay, in Mumbai. So planning to watch that one with some friends at some restaurant in Mumbai.
Okay, markets 112 points up for the Nifty. We are hugging on to that line in terms of where the direction has moved. So Rajat, what's been keeping you busy in terms of portfolio allocation? How have you changed? What have you allocated? What have you subtracted in the last 3 months?
So the thing is, I've not done things very differently. It's the same stocks that we're holding and buying more of, which I've spoken to you about, many times. The same ITC, Infosys, Kohl India, ONGC, Lupin. We've just added 2 more stocks. In fact, added 1 more and initiated coverage on the other one. One is Bandhan Bank, because I was going through their financials, and it's a very unique bank because most other banking stocks, banking sector in general, you'll see credit offtake is usually very high compared to their deposits growth. So this is one bank where deposits are growing really rapidly, and their credit offtake, what they're lending is not growing as fast. And I think the reason is they probably wanted to maintain too much cash on their books, because the company has done a lot in the last 2 years. They first acquired like home lending business, Proof Finance, but then they got into AMC business. They acquired IDFC's mutual fund business, which is now Bandhan Mutual Fund. So now I think going forward, I won't be surprised if you see quarter on quarter their net interest margins jumping sharply because they've got enough money to give out, enough credit offtake which they can do with the raw material they have on their books. And valuation wise, it's amazingly cheap compared to most of the other banking stocks. It's right now available at a price earning multiple of 19. And most of the businesses they've added, they'll also start generating revenue. So that's one stock which I'm having in my portfolio. All client portfolios, everywhere we have portfolios, you'll see we've added Bandhan Bank. The other stock that I'm looking at is Panacea Biotech. Very, very interesting company. I think in COVID days, before COVID days, they had a lot of debt on their books. Around COVID, they restructured the company. They've paid off all their debt. It's a debt-free company. They got out of low production markets like India and Nepal, which is where they did their whole polio immunization. And now they're focusing more on developing nations in Africa. They've got patented their polio vaccination in 30 countries. Their big clients are Government of India, UNICEF, and Pan American Health Organization. Their order book stands at 1,040 crores. That's one stock that I really like. And these are the only two stocks that I'm looking at. But broadly, to answer your question, Nikunj, I meet clients and they're very eager to add stocks into their portfolios because stock markets have done phenomenally well. What I tell them is that, keep maintaining a balance between the money you have in your fixed income products, in your banks, and what you're investing in stocks. To the extent you have incremental money coming, have a allocation mix and keep dividing it equally. So, not done very much differently the last few months.
TCS is flying. 1% for TCS is 36 rupees. That's actually not bad. But what is flying today is actually Bajaj Finance. It's a new high. Nuresh, I think it's a new high for Bajaj Finance.
Yeah, a new all-time high for Bajaj Finance. And finally above that 8,000 mark after 5 attempts over the last 2 years. So seems like a fresh start of a trend. And in the last few times, every time it went to 8,000, took a sharper dip, went to say almost 5,300. The next time it was 5,500. Recently, it made a dip towards 6,800. So going forward, I would expect a move towards 8,400, 8,600 in the short term.
Rajat, Bajaj Finance is exactly moving like what HDFC Bank, let's say, did in last decade. The sector was not doing well. There was a problem in the steel sector, power sector, metal sector, and yet HDFC Bank was able to maintain its growth and its NPA trajectory. Bajaj Finance is growing at a time when retail credit is not growing, when other NBFCs are struggling, and they're growing at a rate which is enviable, 30% plus.
Yeah, I know, and I think it's a mystery to me how they've managed to grow. And anytime a company decides to do fundraising and do a QIP or sell more shares or whatever, typically you'll see the fact that so much more shares will come in the market is actually a negative news initially for the stock, and the stock falls. But the fact that they're raising so much money, their stock is actually doing well. But to be honest, around 2 years or 3 years back, I don't remember exactly what time it was, I said, I don't like this stock. And this was immediately after they, converted a lot of their loan book into flexi loans. So then, the NPA regulation does not apply to those flexi loans because, the categorization changed. I said, no, I don't like this stock because of the accounting policy that they've done this. But, it has surprised me as well. The stock continues to move higher, you're right. Having said that, sometimes it happens you don't track certain stocks for whatever reason, you sort of ignore, you don't like them, so you just ignore, you don't like them. And there's many other stocks to, buy, hold, make money in. I don't know if it was a mistake on my part to not realize, but again, since 2-3 years, I don't think the stock has gone anywhere. I think if you see the last 2-year performance or 3-year performance, even now, with all the a fan following that this stock has, it's actually remained, I don't know, if you check the price chart for the last 2 years, I think it would be pretty flattish. I think, I'm not sure if it's moved higher. But recently it's gone from 7,000, 7,900 now. So yeah, I think since the time I said that, it's not done anything significant.
That's the take coming in on Bajaj Finance as we speak right now. But Rajat, soon we're going to kickstart earnings as well, right? Just next week, you've got all the IT majors come out with their numbers. Tell me, what can we expect? Because it seems that the numbers and the commentary is still going to be weak. But do you think now, if at all, the stocks do plunge after the numbers, that may be a good time to start nibbling in?
No, absolutely. I think it's already right now. It's a great time. One of the stocks, when I was talking to Nikunj, I said it's the same stocks. I said Infosys is something I'm buying more of. It's really interesting that, these stocks sometimes based on future guidance, they keep falling and then, they revive when the numbers start looking good. But if you look at their numbers, if you look at their income statements, Infosys has always been growing at that 20% mark in terms of the total revenue. It was 80,000 crore in 2019, then 90,000 crore next year, 100,000 crore. Today it's 146,000 crore for financial year 23. And the growth has always been the same. So the stock keeps going up and down based on, overall valuations, but the growth in the revenue has always maintained irrespective of what the stock price is doing. And I think right now also you see a company like Infosys, an IT company. I was listening to a comparison between IT companies in India and abroad some time back. One of your guests, it's unique. Which IT company gives a dividend of 2.5% at this price? At 1,400 plus rupees, and Infosys's dividend yield 2.5. What I'm holding in my portfolio, my dividend yield for Infosys is about 3.69. And every time the stock falls, I think you should buy a little more of it. And every time it goes up, you should continue to hold because, there's no reason to sell these stocks. The growth is intact. The stories are intact. So we look at the earnings, but I'm not too much driven by that so long as they keep maintaining their, growth in revenue and profitability.
That time on the show, when we get you some BTST trades as well. Kunal, what's on your list as we wind down the week?
So 2 buy calls and focusing on mid-cap names. NBCC is the first stock which is trying to get into a consolidation, but then I think it's also forming a bullish pennant formation on the daily chart. So it could be ready for a breakout pretty soon. Would suggest a buy with a target of 66, stop loss at 58. And L&T Finance is the other stock. Excellent breakout today for the stock, about 135 mark. Would look out for targets at least in the range of 150 plus. Stop loss to be kept at 133.
Right. Now, what's on your BTST list?
So first is a buy on Kohl India. The stock has reversed well. Stop loss at 123, target price of 130. Second is a buy on IndusInd Bank, reversing back again from the 1380, 1400 mark. Could eventually break out over 1470s. For now, a target price of 1470, stop loss at 1420.
Let's just, on that note, also mark out what are the cues for next week. And, next week, Nikunj, officially we're going to start off the earnings season across the globe, right? And for us, it's going to be on 11th TCS, then you'll have Infosys, you'll have HCL Technologies, whole host of mid-caps, Delta Corp, Zaggle, Sami Hotels, Angel One, HDFC AMC, Tata Metallics, Sterling and Wilson, a lot of these companies coming out with their numbers. And I think that's where the market will find its Q4, right? From.
So there are two things which are important. One, the absolute positioning ahead of earnings season and positioning of IT, which is the first leg. Yeah. The positioning of IT in the month of April was that nothing will ever go right for them. The positioning for rest of the market is that nothing will ever go wrong here. Unlike April, the positioning of the market was that something will go right and something will go wrong for the broader market, but for IT, nothing will go right. IT companies never came out with excellent numbers for the month of April, yet the stocks have come back. You could talk about the rally in NASDAQ, you can talk about valuations or a simple reversal which happened when money moved out of banks to IT. Right now, that's not the positioning. While markets are not charged up and super bullish about IT, TCS I think is at a 52-week high?
Yes, it made a 52-week just now.
Imagine. Ahead of numbers where nobody is expecting anything, TCS is at a 52-week high. Infosys is not far away from an high. HCL Tech has almost a 20% swing from the recent flow. Correct. So it is not that markets are not expecting anything from IT. They are expecting, because the deals what they've reported, for especially TCS and Infosys, that there would be renewed optimism and there would be decent commentary. If anything is missing, then IT stocks automatically will fall into this downward spiral. That's one. Broader market, the expectations this time around are very varied because earnings season is in October, but Diwali is in November. Same time last year, earnings season and the Diwali and the Dussehra coincided in October. So that interplay would be there. Banks is interesting. Everybody likes banks. Everybody owns banks, but banks are not moving higher. If bank numbers are strong, then are we in for a reversal of money moving from IT to banks? See, which are the sectors where you get surprises from? IT, banks and metals. Consumer, you don't get surprise. And these, you never get a surprise from autos. You never get a surprise largely from...
All of it is known any which way.
Yeah, so these are three sectors you'll get surprise from. Metals, too thin, they will come in the last leg. IT is the first leg, banks are somewhere in the middle. Banks, if they surprise you, which they will in terms of upside is what I expect, will that be reflected in price action?
And even for banks, much of the news is already digested because of the Q2 updates. We've already seen a price action move, even with a Bajaj Finance, for instance, or HDFC Bank, or the smaller ones, which have had some excellent growth numbers, even PSBs and private lot.
So nothing is cheap, to
Yeah.
be very frank. Now the tricky part is railways and defense. Markets have taken these stocks higher exponentially. It's been a parabolic move in some of these stocks.
Yeah.
Now these are the businesses where you will not see parabolic earnings recovery or parabolic earnings in the current quarter. So for those who had on heart investors and traders who bought into them are in for a result disappointment, because let's say if you are an HL, if you're making an aircraft, you will take 10 years to make an aircraft. If you're Kochi shipyard, it will take 5, 7, 10 years to make a ship. And markets have taken these stocks higher as if the ship is going to be made in next 6 months and delivered in next quarter. So that's where I think the numbers are going to be good, but not great. So will the momentum be justified in defense, railways? The surprise sector, if you frankly ask me, merchant power. I think that's where prices have really gone higher. So that's where I think the surprise could come in from. Some companies where margin pressures here and there, so you could be in for some surprise from consumers. But barring that, it's earnings season where the temperament of the market actually would be tested. I don't think it's a trajectory which will be questioned.
Yeah, that's going to be the case. Rajat, where is it that you're anticipating big positives or negatives from the earnings?
I think FMCG is one sector where you'll probably see earnings improving a lot, not just for this quarter, but this quarter after that, post Diwali, because sales really increased during that time. And one of my favorite stocks in that basket, again, I've spoken about it many times over the last 2-3 years, is ITC. And even right now, I think for the second quarter, their revenue was up from, this is operating revenue overall, was up from 14,000 crore to about 18,000 crore if you compare it to the previous year. So, it's firing all cylinders. Its revenues across all segments, cigarettes, FMCG, hotels, everywhere is just going up by 20-25% each year. So I think I'd be looking out for results on IT and a lot of the other FMCG stocks. The other stock that we have is United Spirits. I'd be, keeping a close eye on what happens there. So I think FMCG is one sector. Banking, I don't think will do much from here because most of the things that had to happen have already happened in terms of increase in interest rates, which RBI has done 250 basis points the last 2 years. I was listening to the governor's commentary post the policy today. And, they said that we're going to have ample liquidity. We'll maintain that, but nothing big is going to happen there anytime. And I think it's going to be a pause there for banking. So, yeah, to answer short, FMCG is one sector where I think earnings will surprise in a positive way.
Okay, Rajat, great to have you on the show. We'll let you go on that note.